Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Thursday, January 23rd. Well, rather quiet mixed trade overnight is starting to firm up as we get a little closer to the morning pause. Corn right now is near its highs, up 1.5 to 2 cents. Bean prices up 3 to 5. Meal prices up about $2, while oil has also flipped that to being about 5 to 10 points. Higher wheat prices do lag, however, still about a penny lower across all three classes. Speculative traders yesterday were buyers in soybean meal while being net sellers pretty much everywhere else. Despite yesterday's selling, we've got money managers still long over 300,000 contracts of corn, 45,000 soybeans, while short 88,000 in Chicago wheat and about 53,000 contracts in soybean meal. We've got speculative traders now pretty much flat in the bean oil market. Open interest was mixed up in corn, meal, and oil, while down in beans and in wheat. Near-term forecasts in South America are improving, with additional chances for rain across Argentina later this week and again early next week. Rains are expected to favor the west central and northern growing regions, a little bit more scattered as you get into the east central and southeastern regions. The Buenos Aires Grain Exchange will be out later today with updates on crop progress and ratings. Northern and central growing areas of Brazil will enjoy a little bit of a dry stretch here before the potential for another round of fairly heavy rains next week. The wetter than normal pattern has slowed crop development and soybean harvest, while also delaying the second crop of corn plantings. Export sales are pushed until tomorrow, while later today the EIA will release their weekly ethanol production data, delayed a day due to the Martin Luther King holiday on Monday. We're likely to start seeing some seasonal slowdowns as stocks have built, while ethanol production margins have also pulled back. Harsh winter weather also tends to slow ethanol production rates. Also later today, President Trump's nominee to head the USDA, Brooke Rollins, she's expected to appear in front of the Senate Ag Committee to face questions on a number of ag-related issues, including the new Farm Bill and her stance on biofuels. In the past, she has led an organization that did oppose ethanol mandates and farm subsidies. Despite that, it does appear that she is widely expected to be pass and be nominated as USDA Secretary. March corn prices did bounce from an overnight test of the 480 level. Yesterday, corn prices traded to a fresh 8-month high before pulling back a touch in late trade. Key resistance rests just above the market between 5 and 510, an area that I think is going to require further planting delays in Brazil in order to be breached. March beans also snapped back after trading below the 1050 level overnight. Yesterday's high at 1073.5 was a 3.5-month high, with next resistance at $11. U.S. prices do remain at least $1 above spot prices being offered in Brazil out through April. So I think any rebounds here will have to start being led by improvement in prices to our south. Inside trade for the March meal overnight as it continues to benefit from fund short covering. And next resistance is a December high at 321.60. And recent weakness in bean oil, likely stemming from the Trump administration support for biodiesel, seemingly lukewarm at best. Prices did, however, bounce off a test of the 44-cent level overnight. A recent cold snap that supported wheat prices earlier in the week seems to be fading as temperatures do gradually warm to above normal readings by the end of January throughout much of the nation's midsection. We do, however, have limited prospects for rain and snow across much of the winter wheat growing areas over the next week. Thanks for listening, everyone. Hope you have a great day.